Hi guys and welcome to the trading show. This week we are gonna talk about
markets, stocks still weak. Our portfolio, Bitcoin flies. Tip of the week, seasonal bias on orange juice future. And the weekly rollovers.
and if you are interested in systematic trading, then subscribe to our channel. I am Francesco Placci, Head of R&D at Unger Academy. Let's start from the market overview to see together what happened during the week. Okay, let's start as usual for our analysis from the stock indices, and we see that this week they are all showing some weakness. They have been struggling to rise for some times already. You see, this is the Nasdaq and this is the mini S&P, which is weak too, while the European stock exchanges are in a trading range for a long time. The unusual thing is that stock exchanges go down and also bonds, which are usually an edge towards the stock market. The energy sector is also weak, natural gas excluded. Metals rise, especially platinum, and meats stop rising, in particular lean hogs that came from a very strong bullish trend. The race of cereals continues, which we see to be in a positive trend for at least 3 months. But the real winner of this week is Bitcoin future, which has given us good results with our trading systems. Bitcoin future has risen by 14.4% over the last week and seems to have come out from this lateral phase. It has broken all the highs, and we will see if it will be able to continue in its run. Regarding historical volatility, we generally see a reduction in volatility for equity indices. It is on very low percentiles, but still remains high compared to the annual average. But if we analyze the implied volatility, we see a different picture, especially for the short-term volatility. The white line represents the 9 days SPX volatility index. You can see how it has risen in the last week, as well as the VIX index, which is the yellow line. Long-term volatility, on the other hand, remains stable. Short-term volatility is basically rising to reach long-term volatility due to the upcoming US elections. So it is quite obvious that short-term volatility is the one that rises the most. We have another different picture if we look at VIX futures. In this case, short-term volatility is the highest, and you see as time passes, volatility tends to decrease, so we are in full backwardation. After seeing some key statistics on financial markets, and given the fact that automated traders also use this data to build their trading strategies, as usual, we will now take a look at our portfolio of trading strategies to see how systems have reacted to current market conditions.
Good morning everyone, and welcome back to this new appointment with the analysis of our systems. This week I want to show you a system. In particular, we will focus on the Bitcoin futures market. The Bitcoin, as you may know, was launched in 2018. And so from that date, the traders were able to trade on a regulated market and not on a over-the-counter one. That is a good thing because it means that there is an exchange, in this case is the CME, the Chicago Mercantile Exchange, that controls all the transactions on this market. Now let's have a look at the performance report, and we can see that the last week the system managed to reach a profit target of $3,000 which seems to be quite a lot, but I ensure you that on this market is not a so big target, because the tick value on this market is $25. The strategy is a trend following system developed on a 60 minutes time frame, so a very simple strategy. And we can see from the average trade sheet that the strategy managed to reach over $320 average trade, but we can also note that this strategy operates just on one side, so it operates just long. Why it operates just long? Because on the short side there is a common rule set by the exchange that requires a $170,000 margin for short positions. So we can say that shorts on this market are not so convenient, because in this case a big portion of our capital will be used to cover margins on Bitcoin. Let's have a look also at the performance summary, and we can see that in the last 2 years the system managed to reach a profit of $72,000 with a drawdown of around $5,000. I also want to show you another system also on Bitcoin futures market. It is a trend following strategy, also this one. And we can see that in the last week the strategy managed to reach these two beautiful profit targets, and we can see it here of around 2,500 each, that allowed the strategy to reach new fresh equity highs. And that's because the strategy has taken advantage of the volatility generated by this particular instrument. I would also advise to the developing of the automated strategies also on these particular markets that are not conventional markets, but still they can produce some profits. Okay, now we can go to see the Titan. There is the software that we use to filter our strategies. This time we will analyze in particular the currencies sector, and we will in particular this portfolio will be composed by the Euro futures, the British Pound futures, also the Japanese yen, and other minor crosses. We can see that the starting date is 1st January 2020 and the ending date is today. From the equity curve analysis, we can see that the red line, which is the equity without any filters, any Titan filter, and we can see that 2020 would have been a disaster, we can say, but with the Titan filters, we can see the blue equity line, the strategy managed to perform better. Of course, this result is not so good because the drawdown is still quite large. But we can say that the Titan's filters have behaved very well, also if we think that the red line wasn't so good, was in loss of about $10,000 during these years, and now is trying to recover. We can see all in all that the profits are positive, but the maximum historical drawdown is very big. So all in all, if we talk about the currencies sector, we can say that 2020 was not a positive year since this moment, and this bad period lasts from 2 years, I must say. But with Titan filters, we managed to reach some profits also on this sector.
Hello everyone and welcome from Andrea Unger. Today we will have a deeper look into the orange juice main characteristics. So the orange juice futures is listed on the ICE exchange, and orange juice future is the shortening of frozen concentrated orange juice, and this future is listed, as said, in the ICE exchange, and it has a point value of $150 because the contract size is 15,000 pounds, but the price quotation is on the cents of the contract size. And the listed contracts are January, March, May, July, September, and November. And the tick size is 5% of a point, of a whole point, and this is equal to $7.50 per contract. And the trading hours goes from 8 a.m. of New York time to 2 a.m. at New York time. But why I told you about this underlying? Well, it's pretty funny, but 2 years ago I was watching again the film Trading Places, where the famous actor Eddie Murphy took place, and the film was called Trading Places, and this film was made in 1883. So I tried to create a strategy based on the idea that was given into the film. But now, for a moment, let's go to the most critical part of this product. So the most critical part of this product, in my opinion, is related to the liquidity. And in fact, as you can see here, we have the histogram of the daily volumes of the orange juice future. And as you can see, usually the values are really low. And here with this color, you can see the moving average created on the volumes at 250 days, that is approximately 1 year of trading. And as you can see, the values of the moving average usually go from 900 contract to 800 contract, with some peaks around 1,100 contracts per day. So it's pretty illiquid, and of course this product is not good for intraday or for short-term trading strategies. But as said, I took this idea from the film Trading Places, where it was described, a sort of seasonal bias, a seasonal behavior during the winter month. And in particular here, I created a strategy that tries to go long after the mid of October until December, and then it reverts from the beginning of December up to January. So here you can see the results of the backtesting, and the shape of the equity that starts in 1970 is pretty nice, and it's good. It's both good on the long side and on the short side, and the average trade is really good, so it should be able to face the expensive slippage and commission we may have to face on this very illiquid market. I will not go so much into the details of this strategy, but I can tell you that in the second part, so in the first part, and of course from the first part of October, the strategy tries to go longer with a breakout order, and the level is calculated on a price channel, so a sort of a Donchian channel at a certain number of days. And the opposite band of this channel is used also as a trailing stop, and vice versa for the short side of the strategy. And the short side of the strategy, as I said, starts at December and ends with the arrival of the new year, so at January. In general, I would suggest you not to trade this kind of underlying, because the fees related to the data feed are really expensive. In fact, the ICE exchange, so the Intercontinental Exchange, usually costs for non-professional users more than $110 per month. So unless you have at least, I would say, 5 trading strategies you want to trade on this market, in my opinion, it's not suggested to trade the orange juice, just because of the costs related to the data feed. So once you have maybe 5 or 10 trading strategies on the Intercontinental Exchange, you may think to buy the data for this exchange to split the costs of the data among many strategies, of course. And for the purpose of this backtest, I've used the continuous contract of the orange juice, but if you wanna develop this kind of strategy, I would recommend you not to use the same contract I've used, but I think it would be better to use the main expirations all over the year, because each one of them may have a different sensibility according to the seasonal behavior. Now, I've used this one just to see if there was a sort of bias or a seasonal trend on the orange juice future, but once you want to develop this kind of strategy, I would highly recommend to try developing it on each single expiration of the year.
Okay, rollover for the next week. We have all the energy futures that expire: natural gas, heating oil and gasoline. Then we have the expiration on October 29th of the feeder cattle, but we are already active on November expiration because we have already rolled over. Finally, at the end of the month, we have the rollover of Bitcoin future on October 29th. Well guys, so if you want to learn how to build trading systems like Andrea Unger, the only 4-time trading world champion with real money, go ahead and click on the link below. You will be able to pick a date and a time for a 45-minute call, totally free, with one of our tutors. We will talk about your current situation, what you are doing in trading and what you would like to do instead. And we will try to understand together if we can help you achieve your trading goals. Finally, if you like this video, press like and then subscribe to our channel. Thank you for watching. See you next week with another episode of The Trading Show.